As I've said ad nauseum, and this is something we've been doing for probably a year now. Everyone thinks that a switch is going to flip, it's going to click, and then bam, you're a trader. And that's not how it works. That's not how any of this works, Beatrice. The way it works is it's just a million little things that make you a successful trader. And it's so many, it's like each week I think of more and more and more of these things. And it's little things like a few days ago, I set up things beautifully. I hate to admit exactly what I did because it just really, really rubbed me wrong. But I fat figured an order and I sold something at the market that I should not have sold. And then the market got away from me. I was supposed to put in a limit order for some huge amount. And that's a little thing. And I think in one of the presentations past, I said, announce your order, So instead of saying, I want to sell, and I think it was I put in a limit order of 0.30, and I wanted to put a limit order of like 30 or something, okay? Not that it would get hit, but I would adjust that limit order from there. Anyway, so number 378,199, don't be haunted by the ghost of trades past. Mark Douglas, my brother from another mother. I never met him in person. I talked with him once or twice on the phone. We were supposed to be together on a team on a project, and it never came to fruition. And unfortunately, Mr. Douglas is no longer with us. So that's one of my regrets, that I didn't follow up with him and maybe do something else or try to develop a friendship. But I learned a lot from Mark Douglas early on. Obviously, the Disciplined Trader and Trading in the Zone. The Disciplined Trader for me struck a chord because it was like one of the first really serious books that really addressed a lot of the issues in trading psychology. But anyway, paraphrasing Mr. Douglas, at one point he said, when you lose on a trade, you don't just feel that one loss, you feel the pain from all of your prior losses. And 3 or 4 years ago, I was talking to a client on the phone, and I said that, and I didn't think that was that big of a deal. And boy, he was like, it really snapped with him, like, oh my God, that makes so much sense. And I've been wanting to kind of flesh that out since. And from a psychological standpoint, there is a reasoning for this, okay? And let me just kind of back up for a second. And if anybody who has kids probably knows this, it's like your kid will do some sort of bad behavior repeatedly, right? And it kind of builds up with you. And then the kid might do that behavior again, and you snap. And to an outsider, you look like a utter lunatic, right? And it's not that one little thing they did, it's everything they did prior to that. Well, that's kind of like one example of how that psychology works. And Mr. Hansen said, I love that song he does, bop or whatever, that'll be in my head all day. But anyway, he said it's like having a brain that's Velcro for the bad, but Teflon for the good. And he was explaining the caveman, okay, in evolution. And if you think about our brains and how fast society has moved, especially like over the last 100 years, our brains just can't keep up. Now, he's going all the way back to caveman time. But just to kind of sidetrack for a second, I think it was Andrew Quick or somebody named Quick who wrote the book Limitless, which is a good book, but it's one of those books that tells you what they're going to tell you instead of just telling you, and it makes me a little nuts. But I haven't given up on it. I'm going to finish it. But one thing that he did say in there was he does a lot of statistical comparisons to like the average person today, okay, consumes more information than a person, and I forget exactly how many years ago, but it's like less than 100 years ago, consumed in their entire lifetime. So our brains have not caught up to all of this technology. And he uses a lot of other examples too, and I need to dig out the book and get the examples out of it. I think I just have it on audio now I'm thinking about it. But even going back 20 years and 30 years, the amount that we're bombarded with today is just crazy. And I think that's part of the ADD behavior, the flashing lights and everything. And I'm pretty bad with the ADD, and it's something that I always kind of joked about it. But now I'm beginning to take it more and more seriously and do some things to deal with it. And part of the ADD is there's just so many shining lights going on everywhere. My wife likes to watch a lot of TV. I watch TV with her at night just so I could spend some time with her, right? But I'll notice like during the day, like if she's watching TV and what she's watching gets a little boring, she'll pick up her phone and start watching videos on her phone. So it's like and I'm not picking on her because a lot of us are guilty of that. Like when I go outside with the dog in the mornings or whatever, I try not to get on my phone. I notice the neighbors, they're all playing on their phones instead of, playing with the dog or whatever. And I'm not better than I'm not judging. I'm just saying that you got to give your brain a break because so much is happening. Now, where I was going with all this is it's the evolution of the brain. And in a lot of ways, we still are thinking like cavemen. We're still animals, if you think about it. Some of the behavior, some more than others. But if you go back to the caveman times, like Mr. Hansen was talking about, it's like you have sticks and carrots, okay? And kind of like the old carrot and stick thing, it's like the stick is something that causes pain, and the carrot would be your food, something that causes pleasure, sex, or whatever else that you're into, okay? Or you need. So we tend to focus on the stick more than the carrot, okay? So he was saying like, okay, if you don't find food today, then maybe you'll find food tomorrow and you could deal with that if you're a caveman. But if a saber-toothed tiger, the stick, eats you today, then you won't be around tomorrow. So you're going to be more emotionally reactive to a potential danger, okay, than you will be to some sort of a reward. And there's a whole neurology there that I often talk about. And trading neurology is something that I think is going to be very important. It's something that I've only started exploring for about 12 years. Denise Shaw gave a speech about 12 years ago in San Francisco, TSAFF conference. Anyway, I'll get that right. Technical Analysis Society of San Francisco. And she talked about how you can't make any decision without emotions, and then just kind of exploring into that neurology a little bit, learning more and more and more, like a negative impact versus a positive impact. And if you think about it, be cognizant of this in your own trading, okay? I can't remember the good days I had lately trading. I know there's been a few, okay? I know I had a good week last week or a week before. But when I think about what happened last week, it's like overall it was a good week, but I think about I got creamed on Tuesday. And it really, it still pisses me off that I did that, okay? So the bad does tend to stick to you like Velcro a lot more than the good. And that's something you have to wrap your head around. And the importance of this is that you could end up in like a negative feedback loop. And I've done charts before where it's like I gave a negative a -2 and a positive a +1. And even if you're trading successfully, your emotions are going to look like that. They're going to be in a bit of a downward trajectory because of this neurology that we have, and you have to be willing to accept that. Now, how do we fix this? Well, you can't, okay? That's the bad news. The good news is if you recognize these things and how they affect your trading, then you can take steps in that direction. And again, it's about feeling normal, and I'm going to touch upon that in just 1 second. I'll get a little ahead of myself. But if I could make you feel normal in your frustrations and your aggravations with trading, then you can become a better and better trader. And same thing goes for me too. I'm a very emotional kind of guy. I get very emotional easily. It's just my makeup. My mom was like this, and that's I guess it's in my lineage of genetics. But you have to be willing to accept all of these things and say, okay, it's okay to feel a certain way. Now, borrowing from the Zen proverbs, getting back to this, is when walking, walk, when eating, eat, okay? And then compartmentalize when trading, trade. My wife is going through some issues, well, we're going through it, right? with her parents. It's kind of like the season. Now, I went through the same thing a few years back, and it was 6 months of kind of hell. My parents both got diagnosed in the same day with cancer, and my father only lasted a few weeks, and my mother lasted 6 months, almost to the day. And I was helping my sister with my mother, and kind of long story endless, but I remember a few times over the last couple of years, I've gone into my website and looked at some things. I'm like, how the hell did I do all this stuff? I had no clue how I did it. And the way I did it was I was somehow able to compartmentalize. And that's something that I'm trying to tell my wife to do. It's like when you have to deal with the situation, deal with the situation. But when you're not having to deal with the situation, do something else. Okay. Focus on your job, your work, whatever, your career. And so I would focus on, in this case, it was building the members area of my website. It somehow was able to compartmentalize, and even when I was away at my remote office at my sister's house, she let me have a small little nook and threw some computers in there or whatever, big screen. I was able to work on these things in between taking care of my mom. So that's kind of like the importance of being able to compartmentalize. So you have to compartmentalize that trade within that one trade. Now, how do you do that? Well, it's not super easy. This is a little random. I thought I wanted to throw this in here, and this is kind of along the lines of feeling normal, okay? And probably the worst thing you can do in trading is have success early on. I don't know of any people that had success early on that are still successful today, but I know a lot of people that fail miserably that are successful today when it comes to trading. And one of the things is, year one, you think it's easy, especially if you have a decent bull market or whatever. And then, you're 10 years in this process, and you're like, man, I don't really know anything, do I? And you do, but you have that feeling. So you're not alone in this. Anyway, I'm trying to get you to it's okay to feel this, right? Sting once saying, you're not alone in being alone. I saw him back when I was in college, back when he had separated from the police or whatever, and he did an acoustic version of Message in a Bottle. I never listened to the lyrics, and I was like, wow, that's pretty cool. Walked out this morning, I don't believe what I saw, 100 billion bottles washed upon the shore. Seems I'm not alone in being alone, 100 billion castaways looking for a home. So his point was, you're on a deserted island, metaphorically, of course, I'm guessing, and you feel like you're all alone. He puts out a message in a bottle, right? And all of a sudden, he wakes up one day and all these messages come back from everybody else. And that's the thing you're gonna have to realize is you're not alone in being alone. You're not alone in getting really pissed off when you have a losing trade, because you've got neurology and psychology working against you in a really, really, really big way. And again, if I could normalize this for you and for me from a selfish standpoint, then your life will get a lot easier. So how do we do that? Well, document. Everything always comes back to that, okay? And you want to analyze the process. Now, said I wasn't going to do it, but I'm doing it anyway. Morning pages have been a godsend for me. I did them years ago, quit, got lazy or whatever. I don't know what happened. I wish I never would have quit. I forget how many years I've been doing them now, maybe 10. I don't know. I have to go back and look. But it's been a while. But wake up every morning, and the first thing you do is write 3 handwritten pages. Write about anything. Okay, dog farted. Oh, I got to do this today. I have to do that today. Make out your to-do list or whatever. But stay analog the best you can. Now I have a digital tablet, but it's analog. Okay, it's not like I could surf the web or anything on that. And I try to not get caught up in those shiny objects or whatever. I try to really focus. That kind of goes back to what I said earlier about being bombarded with this information. It's like you need time to get that out of your head. You can't just start the day running. I've told thousands of people to do this. I don't know anybody who's actually done it, but it'll really change your life. I know someone that does them that did it on their own. That's David Keller, and he's really good with that kind of stuff. And he'll tell you flat out that how important it is. It's one of the best things I've ever done. My wife doesn't get it. It's like, why do you get up so early? And I was like, well, I have to let my brain warm up. But as far as the process itself, you make a trade, okay? What's going to happen with that trade? Two things, okay? You have a positive outcome or you have a negative outcome, okay? Now, if you have a positive outcome, you're probably feeling pretty good. And you should feel good, provided, of course, it was a great setup to begin with, okay? Go back and look at some of those trades we just talked about. I think those are great setups, okay? I can prove it to you by saying, well, there was momentum, there was an acceleration of momentum, there was persistency, there was a fairly well-defined setup, and there was a methodology in the madness, okay? Now, every now and then, I'll make a trade and think what the hell I was thinking, you know? But that's the minority now. And by the way, a million little things, right? You're gonna find yourself saying that less and less. And when you do, it's like you won't even notice it that you're not saying as much, but you're slowly becoming better at this. But even in year 10, like I just said earlier, you'll still have your doubts, and that's okay. Now, let's say you have a positive outcome. You still need to look at that trade, right? And we're all too quick. It's kind of like Annie Duke's type of thinking, is we tend to attribute a positive outcome to skill, and we tend to attribute a negative or a bad outcome to bad luck. And that's just human nature. Again, human nature does not bode well for trading. But if you have a positive outcome, you definitely, maybe even especially, need to look at the chart, back the chart out again, and make sure that it wasn't a mediocre setup. It wasn't extraneous influences, okay? So yesterday, for instance, I had to pull a hunk out of a trading account that I've left alone for the last 5 years. I haven't touched it, but I needed to pull some money, and that's where I decided to pull it from, okay? And as soon as I pulled the money, it's because we had some, yearly bills that come in or whatever. And it's like all of a sudden I'm staring at these thousands of dollars because it for some reason it tells you your day change, right? So I'm looking at this huge freaking number that came out of my account, and I felt the urge, what can I do to replace that? Okay. So that would be an extraneous influence. That has nothing to do with trading, whether I should take a trade or not, but it's an extraneous influence. It's kind of like the ghost of trades past, right? So you got to be careful with that. You got to be careful not to trade out of boredom. You got to be careful not to trade because you have to. I feel like I felt like I have to replace that money as soon as possible. What can I do? What can I do? What can I do? Well, you let the market come to you is what you can do. So I feel confident, and I'm not being egotistical, but I feel confident I can replace that money over time. But I know I can't replace it today, tomorrow, or maybe next week, or even next month, right? And I have to talk through this with myself because I'm not immune to all the emotions and everything. It's like people think you become a trader, bam, you're emotionless and all, you just like Spock and you do these things. Maybe 1 in a million can do that, but the rest of us, we have to deal with these emotions and all. So you kind of feel like you're trading because you have to. Sometimes you feel like you're trading because you have to, because if you're a highly motivated individual and a hard worker, then you're not really good at sitting on your ass and not doing anything, okay? Great for life, bad for trading. That's a whole nother conversation in and of itself, things that are great for life and bad for trading. If you look at the trade and you feel shame, that's good. Like, boy, I sure got lucky on that one. I picked up nickels in front of a bulldozer, or, insert your favorite metaphor there. And if you could say, you'll do that once, and I did something once and was a mistake, and my wife's like, well, you'll do that once, and now when she makes a mistake, I'll tell her, you'll do that once, and that's not working out for me. But anyway, But it stuck with me though. You'll do that once, and so like yesterday, for instance, when I sold something at 30 cents and I was trying to get 30 points or $30, it's like well, you'll do that once. So you definitely need to look at the outcome from a positive trade and make sure, borrowing a line from Annie Duke, you're separating luck from skill. Now, let's say you have a negative outcome, okay? And a lot of times when you stop out of a trade and you'll immediately say, I knew I shouldn't have taken that trade. Okay, so that's what I call foresight in hindsight, if I have that right. What I'm trying to say there is, maybe in a more simplified way, is you took a trade that you probably shouldn't have taken. And when you lose on that trade, it's kind of like what do you call it? It's a forced awareness. Okay. Like, okay, all right, I admit it was a crappy setup, whatever. So you knew going into the trade that you shouldn't have taken it, but you took it anyway. Jesse Livermore once said, a trader, speculator, sometimes makes mistakes and knows he is making them. Amen. Now, let's say this is one of the worst things could actually happen to you, or actually the worst thing that could happen to you would be like on the left side where you make money on a trade, you attribute to skill. Now, let's say you have a negative outcome, and this is where your million little things type of epiphany, one little epiphany comes along, is you go back and look at it and say, well, it was a great setup. So then you could say shit happens. Now, if you find yourself saying shit happens too much, then you need to go back and look at your methodology, look at the markets you're trading. Are they choppy? Is the overall market choppy, et cetera, okay? Now, if it was a great setup, there's a statistically valid outcome, okay? You should be shocked initially when a trade doesn't work because it had persistency, acceleration, and all these good things that I talk about, okay? And a clean setup, clean trades cleanly, and not erratic like electrocardiogram. So if it's a statistically valid outcome, that's a good rep, okay? Because if you see the same exact setup in the near future, you would take it in a heartbeat. Now, all of these things, you come back to the trade, okay? So each one obviously is a rep, and as I've said before, one of the little things, get the good reps in, okay? So if you're seeing an F yeah setup, you really should feel that F yeah feeling, and that's one of the big secrets of trading is that when you look at a setup, you're like, oh, I would be stupid not to take this, and if this trade fails miserably, I don't care. I would take the same trade tomorrow. That's kind of like one of those, you finally start to get it, right? Now, if this is an FES setup, then by all means trade, okay, and then go through this cycle again. But if it's not, and this is the hard part, okay, then don't do anything. And the more motivated you are, the harder it is to not do anything. There's a lot of days I don't recommend anything in the trading service, okay? And when I go a while for doing that, I lose clients because people are like, oh, why am I paying this guy? But what's interesting is I learned many, many years ago, as I've said before, back in the trading markets days, the salesman would beg me to recommend something, right? I'm like, no, I'm not going to do it. And the reason was it was kind of like a really interesting insight into the client, okay? If I recommended crappy stocks, I didn't really lose a lot of clients, okay? And that told me that people were trading for action. So probably could make more money putting out crappy stocks. God, I should not, I'm not going to say his name, but I saw where someone who's one of the most famous, horrible traders in the world now has a trading service. It actually might be worthwhile. You could do the opposite, but I digress. I don't want to be Schadenfreude, but I guess he'll have clients because he's going to probably recommend stuff every day. All right. Anyway, you have to go through the process. And this is one of the little secrets over here is if you don't have anything to do, don't do anything. And you might want to write that down. All right, so again, just to kind of wrap this up, you want to acknowledge the psychology and the neurology. I have to say, when the switch flipped for me, or one of the little epiphanies, is when I learned that there's not only a psychology but a neurology to trade. With psychology, you might be kind of like, what's your name, Ariel, or whatever. That's not me. Okay, oh, I'm not that or whatever. But neurology, you can't deny. Okay, we have this neurology where you have the Velcro and the Teflon, the aforementioned Velcro and Teflon for the bad things sticking and the good things sliding off, right? So embrace that and live with that. Okay. Compartmentalize. Try to focus on the setup, focus on the trade, focus on the process. Try not to focus on the fact that yesterday you had a huge bill that came due and you had to take the money out. And I think it was Joe Rabel. I think it was Joe Rabel back at ChartCon. We were talking about these type of things. And he said he had a really bad week the week prior and he couldn't figure out what was wrong. He was out of sync. Okay. And then it dawned on me, he was having a cocktail Friday night or whatever, or relaxing Friday night, whatever he does. And it dawned on him on Monday, he had to write a $30,000 check for his son's tuition. Okay. And that was kind of hanging over his head, maybe on a subconscious type of level. Okay. So I'm still kind of thinking about what happened yesterday with, pulling the money. And I'm kind of like, okay, well, how am I doing today? How much money have I made back? Oh, I just put a trade on, it's losing money. It's like, okay, going in the wrong direction, at least in that one trade. So you have to really learn how to compartmentalize. And I think that's something that I really need to flesh out. And I think I would encourage you, in case you get hit by a beer truck, to do that on your own too. Learn how to compartmentalize. And you want to document and study the process. Figure out how to separate luck from skill. And boy, bad luck from skill. And you'll do really, really well.